Hi there, a very good morning and good afternoon, depending on wherever you're watching me. This is Simply Stocks with another video on Fortis Healthcare. Whether it is a buy at current levels or you should wait for major declines. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Fortis Healthcare, small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions in a greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time on short-term and medium-term calls on stocks. For detailed market or company talk, you need to directly email me and we can work things out. Now about the company, Fortis Healthcare was established in 2001 and they provide medical and hospital services. It is a marquee hospital brand in North India and a lot of Fortis Healthcare, you can say Fortis hospitals are available. Over 10,000 beds across 70 locations. Also provide diagnostics and daycare services to patients. Market cap of the company is around 12,000 crores or so. If you look at the financials, then these are Q3 FY21 numbers versus December FY20. So sales went up by around 7.8%. There was a sharp jump in profits. So from loss, we had come to profits of around 30 crores. There's a higher interest cost, and that is a cause for concern for investors. And that is why people are staving towards better hospital companies or diagnostic companies rather than getting into Fortis Healthcare, a high debt. Return on equity is negative, which is coming back into positivity, but it's still not that great. Operating profit margin is of 13%, which is again not something to write home about or really big thing to look at. There's low promoter but high institutional holding with 20% free float, so that is fine. But debt and you can say margins are not that great that most of the people would go ahead and invest into. If you look at the performance of the stock, no returns in the last 3 years. For the last 3 years, the company has done nothing. Although for the last 1 month, the stock has surged a bit from 140, 150 levels, around 180, 185 now. So it has gone up some 30% in the last month or 2 months. But otherwise, over the last 3 years period, it has done virtually nothing and returns have not really kicked in. Have been an underperformer even in the industry. It has not done exceptionally well, so that is also something to be looked at. Results have been bad but is improving, and we are seeing that although if you look at last 6-7 quarters results were not that great, but the last quarter results were pretty good, and it is hoped that over the next 2-3 quarters there would be recovery for the company. Low promoter holding is a definite concern that promoter holding need to improve, because this is one of the brands in India in the hospitals, and this is not something like a small cap company in which promoter holding can remain low, etc. In fact, institutional holding is high but promoter holding is low, which is kind of peculiar and nothing that is very, you can say, encouraging for investors. High cost of borrowing is also hurting numbers. So high interest cost of borrowing is also hurting the overall numbers for the company. If you look at the technicals of the stock, there's strong support around the 150 levels. Right now it is around 190, 185. Probably 150 levels is very strong support. Short-term support is around 175. So probably wait for a decline towards 175, 170 to accumulate the stocks. Charts are looking much better than what they were looking, say, about 2-3 months back. So it has done well, but again the markets are not showing any kind of strength, and that was what I was mentioning earlier also in my live chats, that market doesn't look like that it is headed much higher from here, and so these stocks may fall. So wait for 170, wait for 160 levels to probably accumulate if you want to. Otherwise there are other better companies to get into. The breakout is expected above 220. So if somebody wants to play for 2-3 weeks or 1 month's play, they need to wait for 220 levels really to be taken out for a big up move. to come in. May consolidate here, may decline and consolidate. I think 170 to 180 would be the levels to probably look into when you are trying to buying into such stocks. And low return ratios is not that great for the stock. So what needs to be done? In my opinion, avoid as an investment. I would probably look into a lot of companies which are into diagnostics. They are better, which are into other streams rather than hospitals. And even if you want to look into hospitals, I would still bet for something like an Apollo Hospitals on major declines rather than buying into a Fortis. But again, Apollo Hospitals, the valuations is slightly stretched. So in that regard, probably wait for a 15-20% correction there. Wait for it to come between 30 and 50 DMA and accumulate at that point of time. And remember, the market doesn't seem to be going up from here. I believe that market could be choppy in the next couple of months. So be very careful taking positions, especially into such companies. And look for simpler businesses, better businesses to get into and make money into. So this was my video on Fortis Healthcare. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.